Good evening, everyone. Welcome to StockDurbar with Team MarketSmith India. As most of you people are aware of how the session progresses for the benefit of everyone, first we'll start discussing about key indices, starting with the Nifty, broader market indices, and sectoral indices. Then, next part of the presentation or the podcast, we'll be discussing about your stock queries, and we'll be answering those queries one by one. In this uh, webinar, we have whole MarketSmith India team joining. So my colleagues, Mr. Rishit and Wakar Khan are also in this room. So as soon as we finish about the beginning of this webinar, we'll be moving on to the stock specific queries. Until then, to be watchful, we'll be taking 10 to 15 minutes of time to explain how the market is placed at the current moment. Then we'll move on to the main part of the webinar, that is the stock specific queries. There is some issue with the internet. I think this is resolved. We can continue with the webinar. Once again, a very good welcome to everyone for Stock Durbar from MarketSmith India team. First, we'll analyze Nifty's daily chart. As you all are aware that Nifty is currently trading at all-time high levels. Today, it has scaled 26,000 level as well for the first time. It closed about 26,200 level, so which is a new all-time high on the index level. Recently, Nifty has been scaling new all-time highs consistently on day-to-day basis. Before that, we had seen some kind of a correction or a small profit booking happening in the index. You can see here around this area, Nifty came down slightly and it retraced towards its 21 DMA, which is a green line, and it has found very good support at its 21 DMA. Going forward as well, this 21 DMA is going to be a very crucial level for the index. On the downside, we are expecting to see good support at this level going forward as well. If that level is breached, the next support is at its 50 DMA, which is the red line here. Historically, 50 DMA has been a very good support for the index. You can see here multiple times it has tested its 50 DMA and it has found very good support around that level. So that is going to be a major support levels going forward. Coming to the market status, we are in confirmed uptrend according to O'Neill's methodology. Whenever market or Nifty key benchmark index trades at new all-time highs, the market status is changed to confirmed uptrend. Hence, we are still continue to in confirmed uptrend. Whenever market is in confirmed uptrend, it is very important to track weakness in the market as well. We never know when the market is going to top out from here, right? No, market doesn't continuously rally every day, right? There has to be some phases where it succumbs to selling as well. So we never know when the market is going to top out. For that, distribution days will definitely help us to track weakness in the market. A distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. That is the definition of distribution day. The significance is that the fall is happening on the higher volume. That indicates some kind of selling pressure coming into the markets. So it is a time to be watchful on the markets. That is the reason we consider that as a distribution day. And currently, the distribution day count is at 3. It is very important to count the distribution days as well, right? And if there is an accumulation of distribution days in a cluster of 3 to 4 in a quick succession, then we'll change the market status to under pressure. But currently, as the market is trading at a new all-time highs, there is no major signs of weakness. So it's not a major sign of cautiousness to look at currently. But if the index is breached its 50 DMA on higher volumes, definitely we will be considering the market status change to under pressure. And the significance of market status is very important in O'Neill's methodology. Overall methodology revolves around market status. There are four market status from the owner's perspective. Currently, we are in confirmed uptrend where the probability of breakouts is highest in confirmed uptrend. Next is under pressure, uptrend under pressure. There is some kind of pressure in the current uptrend. That is the definition. And then if there is continuous distribution days accumulation from there, we'll change the market status to downtrend. From downtrend, we look out for rally attempt, and from rally attempt, we need a follow through session to change the market status to confirmed uptrend. So that is the overall definition of market status and the significance on the market. If if you look at the Nifty index, it is trading at new all-time highs. So there is no major signs of weakness has not been observed at the current levels. Recently, volume has also picked up in the Nifty index, which is a good sign. Previously, the volume has stayed below average, but now that volume has also picked up, which is a good sign. This indicates that a good amount of accumulation happening in the majority of the stocks in the index. We move at the other indices, starting with the Midcap 100. The scenario is very pretty similar to broader market indices as well. Currently, the ongoing rally, which is existent in the market, is a broad-based rally, not just specific to any sector or any index. It is overall broad-based rally is going on in the market. Today's candle is not updated here, but it closed flat. If you look at mid cap and small cap indices, Nifty has outperformed in the today's session. But if you look at the overall placement, it is very similar. It is also trading at new all-time highs. 21 DMA has been tested a couple of times, and it found support at its 21 DMA. For mid-cap index also, the 50 DMA has been acting as a very good support in the past as well. So that level is going to be a very crucial level for the Nifty mid-cap as well. We'll look at Nifty small cap as well before moving on to the sectoral indices. Pretty similar charts. If you look at mid cap and small cap, there is slight consolidation happening in the mid cap and small cap indices. If you compare with the Nifty, last 2 weeks of action, Nifty has clearly outperformed mid cap and small cap indices, majorly because of heavyweight stocks such as uh, auto stocks and metals, Reliance and other stocks as well, HDFC Bank, which have good heavyweight in the index, have done very good in the recently. So they have contributed to the outperformance of Nifty. Again, for the Nifty small cap as well, 50 DMA is going to be a crucial level for support. If that level is breached, we might see some kind of selling happening. But looking at the macroeconomic indicators and key indicators, that definitely the overall momentum is on the positive side, and data is also suggesting the rally is going to stay intact going forward as well. We'll start with sectoral indices with the Nifty Bank Index, which has highest weightage in the overall market. Nifty Bank, again, it is also trading at new all-time highs, especially if you look at the banks overall. Recently, last 1 or 2 months, Nifty private banks have done very good when compared to the public sector banks. That is HDFC and the ICICI, Axis have outperformed SBI and other Union Bank of India and other PSU banks. The RBI has kept repo rates unchanged in the August MPC meeting as well. So the on the RBI front, there is not much major announcements and related to the banks, but the banks have been able to generate growth despite higher repo rates. But if you look at the global scenario, due to easing of inflation, the central banks across the globe started to trim their repo rates. So we might see RBI also following the similar suit in the Indian market. So the most of the analysts expect that the rate cut season is going to come in the coming months. So if that happens, definitely the overall growth in the market will definitely improve. And whenever the market growth improves, the need for finances will also increase. That is when banks come into the picture, and banks will definitely also be beneficiary of that overall growth in the economy. And for the Nifty Bank Index, if you look at, it is clearly trading above its key moving averages. And 50 DMA again for this index also going to be very crucial, and 100 DMA also needs to be watched very keenly, because 100 DMA has acted as a very good support previously in the month of July and August. So uh, those two key moving averages are going to act as good supports on the downside. Next, we look at Nifty Pharma Index. Again, a sector which is doing very good in the current market, clearly trading near all-time highs, and 21 DMA is very close to the current trading price, and that level has also acted as a good support recently. Just now we looked at a key article from Deloitte where it talked about Indian pharmaceutical industry, and it is expected that by 2030, the overall industry is going to grow at more than double-digit CAGR until 2030. So huge upside is seen in the pharmaceutical space in India, and historically has been we have been good manufacturers of medicines in the global. If you compare with the global peers, we are the third largest manufacturers in terms of volume, and most of the exports are from India are constituting both IT and pharma exports. So definitely they are going to be very good beneficiary in terms of forex reserves as well. They are doing good for the country, and the employment generation is also huge in these sectors. And the growth in these sectors will definitely or directly be impacting overall economy growth as well. If you look at the index and price volume action, it is very good. The price volume action recently, volume has slightly come down, but the price action has also muted. On the downside, 50 DMA is going to be a very crucial level for Nifty Pharma Index as well. So overall, if you look at the general picture, markets and key major indices are trading at new all-time highs, and for each of the index, 50 DMA has been acting as a very good support, and that is the reason we say that 50 and 200 DMAs to be watched very carefully. Next, we look at a couple of more sectors, and then we can discuss about the stock specific queries and analyze those queries from O'Neill's perspective. We are done with the banking and pharma. Next, we can look at realty and FMCG as well. Nifty Realty, if you look at the index level, it is trading very much near to the all-time highs. It made a new all-time high in the month of June, and from there, some correction has seen in the market in the Nifty Realty sector. It retraced towards its 100 DMA and found good support and reclaimed 100 DMA. Currently, it is again moving higher, and it is just 20 to 30 points below its all-time highs. That is 2 to 3% below all-time highs. So it's not a major off highs to compare. And the overall demand for the real estate India has still been intact. There have been news articles or reports where increasing inventories in metro cities has been there. But if you look at the uh, luxury launches by the major developers in the country, those launches or pre-booking launches have been booked within a day or within a 2 days. So that shows how much the real estate is in demand in India. Overall, if you look at the other reports from the major broking agencies as well, the demand is still intact, and new projects are still being generated and initiated by the realty companies as well. Still, if you compare the Indian market with the global peers, definitely there is still room for the Indian housing sector. If you look at the government numbers as well, the government's push for housing schemes definitely will benefit the reality and its infra-related sectors as well. Next, we can look at Nifty FMCG and we'll move on to queries then. FMCG has also done very good recently. If you look at later for a period of 3 months almost, and from there currently it is trading very near to all-time highs. There is not much off highs, two consecutive sessions of decline, but it's not a major sign of weakness. 21 DMA is still held. There is no breach of 21 DMA still, so 21 DMA and 50 DMA are to be closely watched on the Nifty FMCG sector as well. I think most of the sectors, majority of the sectors which have good heavyweight weightage in the market, we have discussed. And now we can start with the stock specific queries. You can write to in the chat box if you have any query related to any stock. We'll analyze from the owner's perspective and we'll try to give a clear picture and how to read charts as well.
Thanks, Raj. I will start with few queries. The first one is EMIL. The stock is going through, major consolidation. So it formed a stage one consolidation base as Raj is indicating. The volume action was also tepid over there, so that was positive, but it was not able to move higher after the breakout. It attempted couple of times, but ultimately it started moving sideways lower. But the good part what I see is over here the volume action has been much since last 2 months, but price में कोई इतना deterioration नहीं हुआ है. So looks like some good accumulation going on, but the buyer demand is not indicated that. So that's why we have kept ratings over here. So it is poor at D. So if you're already holding the stock, then the stock is below all the key moving averages and you should be very careful about it. If you want a fresh entry, let it reclaim the 50 DMA on a higher volume and sustain above that level. You can do upward pyramiding. You can gradually take the position once it reclaims 50 DMA. Otherwise, I think the story is good. The EPS of 81, I think the fundamentals rating, if we see Raj, we might see some green shoots there also. Yes, the fundamentals is good. Fund holding decent, तो वहाँ पे कोई problem नहीं है. But technically, the stock is not able to move well. See, in India, the consumption story, the consumption related growth story is really good. And so this is one of the player in that field. So once this consolidation is over, we might see a good momentum, but we suggest to follow technicals at this point of time. Let's take Balmer Lorry. Okay, the stock is forming a stage 4 consolidation base, a higher stage base, not an ideal one to chase the breakout of a higher stage base. Even while the base formation, the strength is not that good. It looks a little wide and loose. If you see, it is trying to find support near its 200 DMA, 50 DMA to breach हो ही गया है. So last time also, I think in May, June, it found a support at 200 DMA. Okay, so let's see if this time it can find support over here and rebound. Then maybe for the trading purpose, if you have such knowledge and research, you might consider, because the fundamental strength as well as the fund holding is decent. though the March quarter was not that good, but broadly, the fundamentals are well placed for the company. EPS strength is fair, but the price trend is very poor. The buyer demand is still at B. If you are already holding the stock, use 200 DMA as stop loss. Fresh entry not suggested as of now. It's a higher stage base, but for trading purpose, if you are doing something, then maybe a 50 DMA reclaim or a breakout you can consider for trading if like your own research or your advisor says it. The last we can take is Motherson. Please limit your queries to one or two, then you can always come back because you want to, you know, take the queries of maximum possible. So yeah, this stock gave a very clean breakout today from a stage 3 consolidation base. Even the volume was higher. If you can see what Raj is indicating in today's candle, 135% than the average volume. So this is a good volume breakout. Okay, and RS is at 81. The RS line is moving higher. EPS rating is good. Buyer demand A minus. सब कुछ बढ़िया है. Fund holding भी काफी improve हुआ है इसमें. As Raj is indicating, around 8% increase in the last quarter on a relatively higher base. Base देखो तो that is quite higher. And थोड़ा अर्निंग्स में इतना मोमेंटम नहीं है. सेल्स मोमेंटम इज रियली गुड बट अर्निंग मोमेंटम इज येट टू कम. So if your research suggests, then you can consider taking it because it is in the ideal buy zone.
Thanks, Rushit. Vakarya. I'll take some queries now. Give me JSW Energy, the Tata Power. Thank you. So again, what Raj is trying to point out, that's a stage 4 base, late stage base. So fresh entry is at this moment still it is in the ideal buy zone. Breakout was decent, but fresh entry is not advised. Someone who's holding the stock from an earlier breakout can continue to do so. Since the stock is at this moment comfortably trading about 21 and 50 DMA, but new entry is not suggested. Let the stage count get reset once it need to get for it to get back into the cancelim characteristics. In terms of ratings are still fine. Fund holding is the one that is, I mean, in triple digits, it's increasing with still with a market cap of more than 1,37,000 crores, which is a good sign. So someone who's holding the stock from a previous breakout can continue to do so. I mean, you'd be holding in a decent amount of gains. If this stock has always found support near the 50 DMA, so if 50 DMA gets breached out, can definitely think about exiting the stock partially or fully, depending upon your research. The next can be Tata Power. Thank you. So again, the stock had a clear breakout. Stage count? Can you show me stage count? Yeah, stage count is fine, but I mean volumes are not that great. As you can see, it is not that high at this moment. Just above uh, the overall average line. So the higher the better. But if your research suggests, can definitely have a look at the stock since the other parameters at this moment is fine. Earnings momentum in the last 2 quarters has started to come in for the stock. Fund holding is increasing. RS line is slowly moving higher. So depending upon tomorrow's action, if there is some good price volume action, if your research suggests or if your advisor suggests, then can have a look at this stock. The next we can look at is Newgen Software Techs. So very bad candle today. Downside reversal as one can see. Stock moved near 1500, then came back on a very high volume, which is not a good sign. Uh, I mean, someone who's holding the stock from the breakout at this moment can do uh, since stock is above some key moving averages, but it had come into the ideal profit booking zone as well. Right now, it's trading below the profit booking zone. Overall, ratings continue to remain very good. Just today's candle that is a bit worrisome. Apart from that, if you look at fundamentals, remain very good. ROE at 21%, very good for the stock. Even fund holding increasing superbly. Not much of a distribution across the base formation or even after that is what I can see. Hopefully, if it reverses, I mean, if it's found a bottom and it is reverses from here, then definitely there can be some good action. But if the stock finds support, maybe it will find, if it further goes down, maybe it will find support at the 21 DMA. So keep an eye on the 21 DMA. If I mean, if holding from a prior levels can book out profits, if what are the recent breakouts still can keep 21 DMA. 21 DMA, it is around still 14%, still 14% from here, which is a good time, but still can keep those levels in your mind.
Thanks, Wakar. I'll take few queries now. Let's start with Tata Steel. Currently, it is forming a stage once the consolidation base pattern. It is currently right side of the base formation is being formed currently, and the volume is picked up. Uh, it breached its key moving averages recently, but the levels have been reclaimed as well. But if you look at the ratings are not so good. EPS is poor and price strength is also poor. So both in terms of fundamentals and technicals, the ratings point of view, the stock is not placed good. It is still 10% to pivot, so not anything. RS right rating might improve from the here, but there is EPS will take time to improve. It needs to show its strength in terms of earnings. So it needs another 2 or 3 quarters to improve its EPS rating. Until then, you can wait and look out for other stocks where ratings are looking good and breakout or any additional or advanced buy points are available. Next, we can look into is Kotak Mahindra Bank. Recently, it broken out from its stage 1B flat base. That is on last Friday, it broke out, but it has not found the required momentum to take it forward from the breakout. Ideally, we will look for the stock breaking out from base pattern and finding momentum on the positive side and rally from there. But in the last 3 to 4 trading sessions, the volume has stayed lower and price action has also not so good. It has been on the downside. EPS is very good at 90. The bank has been able to grow in terms of loans generated and loan book as well. But price rating has been deteriorated because of stocks underperformance. For the last 1 year, it has moved sideways. It moved nowhere. You can see from 1800 levels. It has been trading around that area for last 1 year. But the overall market has done very good. The banking stocks have also done very good in the similar period. So the underperformance of the stock led to poor RS, and ideally we would like to see RS above 60s or 70s, but that is lacking in the Kotak Mahindra Bank. And the momentum is also not available at the current moment. And there are lots of stocks, ample stocks available in the current market, which are doing very good. If you compare or do the analysis with the Kotak, definitely there will be very good number of stocks which are under outperforming the Kotak. The moving average lines which are plotted here are simple moving averages and not exponential moving averages. You can also keep exponential moving averages as well from the settings button. But for investment purpose, we advise to stick to simple moving averages. But if you are trading or if you are into short-term trading, you can look at EMAs, that is exponential moving averages. Next is power grid. It has formed a stage 3 cup base pattern and it broke out. I think it closed 1% above pivot, slightly near the pivot levels. The volume has also picked up when it came near the pivot, which is a good sign. But during the base formation as well, the volume was on the higher side when the stock fell, which is not a good sign. We would like to see declining in volumes during the base formation. Ratings are not so bad, but they are fair enough. You can see here EPS and RS are around 66 and 67 respectively. But if you look at the earnings table on the bottom left, you can see it is not able to generate growth in terms of sales. Ideally, from constant perspective, we look at accelerating earnings and accelerating sales. That is lacking in the case of Power Grid. But for the long-term perspective and given the historical performance of the stock, you can start or try investing small amounts of capital into the stock given its performance recently. You can see here for the last 1 year it has done very good, and this breakout might also turn out good given that overall market is very conducive for investments.
Okay, Raj, will take
Which one, Rashid? I didn't
Blue
get it.
Star.
Blue Star. Okay.
Given a good return over the last 1.5 year, the breakout was also successful. It was a stage 4 breakout. So generally we try to avoid higher stage breakout. But the story over here is quite well. So Blue Star is not only you will see at your home, but you will also see in a lot of industries, in a lot of big shops like the refrigerations. You will also find their ACs in the metros. So the multi-purpose, they saw a lot of the overall housing and infra growth, both, you know, is helpful for Blue Star, and that's what visible in the charts as well. You can see the accumulation is very good, buyer demand of A, the RS rating is good, EPS strength is excellent. Even the fund holding number of fund holding the stock has increased notably in the last quarter. Overall, it looks good. If you are holding the stock, you can continue to do so. Fresh entry over here is not suggested. As Raj is indicating, the accumulation in the recent days has been really good. You can see on the high volume. So that is good. So you can continue to hold, but if it breaches some key moving averages, like it is already extended much, almost 15% from 21 DMA. So you can consider some recent lows, maybe today's low or last week's low as a stop loss, and you can consider that. Next, I can take is pre-call. Okay, here the stock is forming a new base, stage 2B flat base, but you can see the volume has started to dry up. Very low volume action over here. And before, I think the start of the base, you can see the volume accumulation was a decent one on a bit higher volume. So overall, it's a good story. If you can see, the fund holding has increased significantly. Okay, it has ROE of 16. The EPS as well as the sales growth is also good one. The EPS strength of 95, as Raj is indicating, is perfect. But technically, अभी थोड़ा weak है. But overall, if you see, there is a good support near this level. जो अभी का level है 460 70 के अराउंड 80 के अराउंड, वहाँ पे एक सपोर्ट बहुत अच्छा है. द पिंक लाइन दैट इज 100 DMA इज ऑल्सो देयर, वहाँ पे भी एक सपोर्ट अच्छा है. सो देर आर चांसेस ऑफ रिवर्सल, बट आई थिंक इफ इट फेल्स फर्दर और जो ये 60 to 80 वाला जोन है वहाँ पे ये होल्ड नहीं होता, देन वन शुड कंसिडर एग्जिटिंग द स्टॉक. On the flip side, once it reclaims the 50 DMA, I think it will start completing the right side of the base and it will be a good candidate for a fresh breakout. Next I can take is JSW Steel. Yes, so the China stimulus, you might be heard it today also. And I think the president of China is even telling that he will come with more stimulus as well. So I think as and when the China gets good stimulus, their housing sector is in good demand. So they are the biggest consumer as well as producer of metals as well as chemicals. So that is always good for these industry because the prices in the international market of the metals will remain on the bit of higher side as the demand will also be higher. और जो चाइना का प्रोडक्शन है उसका डंपिंग नहीं होगा क्योंकि उनको भी अपना सामान यूज करना होगा. एंड सो वंस द डंपिंग स्टॉप्स, जो उनका एक्सपोर्ट है वो बंद कम हो जाएगा, then ultimately there will be a good profitability for the Indian steel companies as well as the other metal companies. Not only the global market, but I think the Indian local demand is also very high. Okay, the way our infrastructure is growing, so the local demand is very high. Even the JSW Steel has good exposure, making metals for the steel for the containers and all the things. So overall, it's a good story. Okay, recently there has been a very good accumulation in the stock, and it has broken out from a double bottom base. It is trading in an ideal buy zone. But what we don't like is its EPS. The earning strength is a bit poor at 19. A lot of weakness over there. Even the relative strength is weak, and last 2 quarters the result has been not good. So we'll wait. Overall the story is good, but we will wait for the company like this to improve the fundamentals as well as do better on the relative strength wise as well. But for the trading purpose, if someone is considering, then the current buyer demand is really good for the stock. Next we can take is Pennar.
Rashid, after this, I can take queries.
Okay, perfect. So the stock is forming a double bottom base, and a disclaimer that this one is the part of our watch list. So it's a very good story in the Panar industry. The fundamentals are quite strong. The EPS trend, the sales growth, fund holding, the EPS of 91 is excellent. Okay, even the buyer demand has been maintained even after going through the period of consolidation. To us, it looks like it is going through a period of consolidation, and you can see the higher volume whenever there is some accumulation, the volume comes is very high. And see that since last 2 days again the volume is a bit on the lesser side. So this is what happening in the stock. So buyer demand is robust and we continue to hold this until we see major technical weakness at least 100 DMA तक, या फिर उसको ब्रीच करने के बाद भी अगर हायर वॉल्यूम पे ब्रीच नहीं किया, then we might continue to hold the stock. This is the part of our long term portfolio. Okay. Otherwise, the technically, fundamentally, the stock is quite good, but needs some good strength from here.
Thanks, Rashid. So, first query I'll take is Infosys. So most of the large cap IT stocks have rebounded well from the lows, as you can see, and people are feeling that the worry that AI could have brought to the IT sector is kind of moving out. And certain companies such as TCS and Mindtree have also come up with their own methods to tackle the AI platform in terms of training the guys. And most of the bigger IT guys are doing the same. And overall, as you can see, once the election is over, the US election is over, The rate cut cycle has already started from the US Fed, and to most of these IT stocks, and even Infosys, has a large exposure to the US industries, and also to the banking industry. And that is why one started feeling that there can be a soft landing going forward and no major signs of recession, then hopefully the IT stocks can have a good run, and that is what we're seeing in this stock as well. In the last few days, yes, the RS line has moved down. The stock is consolidated around the 2150 DMA, but someone who's holding the stock can continue to hold it since the overall fundamentals are improving. Uh, in terms of technically, 50 DMA is very close. So if someone is doing a trading kind of a scenario where you want to book out profits in a sooner manner, then keep 50 DMA probably as your as partial profit booking line. If that doesn't happen, maybe you can keep the normal stop loss rule of 7 to 8%, or even the 100 DMA as your 100 DMA as your overall stop loss zone. But going forward, even from here, if the stock has to show strength, it has to show strength around 50 DMA, because even during the rally phase, apart from the accumulation that it did during the base formation, no major volume bars has started to come in. So buyer demand is kind of getting weakened out. So hopefully, if the stock rebounds from the 50 DMA on good volumes, then definitely we can see a good rally from them, because technicals also remain very important for us. Next can be Indigo Paints. So overall, the stock is forming a very wide and loose base. As you can see, it's been forming for around a year, around 280 days, which is not a good sign. Price trend at 28, buyer demand at C plus, which is not at all a good sign. The stock is just hovering around. I mean, sometime moving up, sometime moving down around its key moving averages. Uh, Selling happening on above average volume. That is why the buyer demand is also going down. RS line is moving down. So definitely looking like a falling knife at this moment, which we tend to avoid at William O'Neill, which doesn't suit the canceling parameter. Breakout is still 12% to pivot, but I mean, lot of improvement needs to happen on the parameters front. So that remains unlikely. So remains an avoid from us. Next can be LIC. So after the breakout, the stock is consolidating on lower volumes. As you can see, volumes have actually dried up. Uh, Today, I mean, the stock did try to reclaim its 21 and sorry, the 100 and the 21 DMA, but unable to do so. Going forward, I mean, a reclaim of the key moving averages, and probably an ideal scenario would be a re-breakout on above average volume. That would be very important with the RS line moving higher. Apart from that, if you look at it, EPS very good. I mean, one of the best within the insurance industry. Fund holding, even with a large base of 6.5 lakh crores of market cap, is still improving in double digits, which is a very good sign. Some technical improvement is what is required at this moment. Maybe a good re-breakout. The stock is around 5% below pivot at this moment. Someone who's holding the stock can continue to hold. I mean, if the recent lows gets booked out, or even if you have a slightly higher risk appetite, if 21 DMA gets breached, sorry, if the 200 DMA gets breached on above average volume, till the point in time, you can hold it, because uh, the good part is the stock never fell on good higher volumes. So maybe it's just the weaker hands moving out of the stock, and hopefully we can assume some good rally if the stock reclaims its 21 and 50 DMA from here on above average volumes.
Thanks, Vakal. I'll take a few queries now. I'll start with JM Financials. Stock broke out from its stage one cup with handle base pattern recently, to be precise, in last week of August. And from there, it has been a very good journey for the stock. It uh, rallied more than 30% in 20 trading sessions, which is a very good action. Currently, it is trading or above the ideal profit booking zone. 20 to 25% is the ideal profit booking zone according to our methodology. Whenever stock reaches that level, we try to advise uh, investors to partial book profits to safeguard the profits. The reason for us not to consider is that EPS has not been good for the stock. Recent quarter earnings have also been not so good. Sales have declined and profits have also eroded in the recent quarter results. Number of funds section are also not looking good, and both funds and share held by the funds have also taken a hit in the last quarter. On that front, we have not considered, but for those who have taken a position and already uh, taken investments into this stock, you can consider to hold, and partial booking can be done depending on the risk appetite. And fresh entry is not advised at this moment because it is extended from the pivot, and on the downside, key moving averages are very extended from here. You can see 21 EMA is 12% from here. In such scenarios, you can start using exponential moving averages to minimize your losses. You can start with 10 EMA or 20 EMA, and if those levels are breached, you can take out or exit from the stock. Next is KPR Mills. The stock formed a stage 4 cup base pattern. It's a little uh, late stage base according to our methodology. The breakout has also not been convincing. You can see here in the yesterday's session, it has been very wide pattern, very long range of trading has happened yesterday. It made a new all-time high, but on the closing basis, it closed in the negative side. Mostly, it is called as a bearish reversal. Whenever stock makes a new high but closes or fails to close in the positive, it's called as bearish reversal. And today's session has also been similar. On it has been on the negative side. The volume has also been on the higher side. So the breakout is not looking convincingly good. It's not advised to take fresh entry at these kind of breakouts. Considering the late stage base also, it is not advised to take fresh entry. And if you look at the ratings are also be not so great to take fresh entries or to ignore the other parameters. EPS has stayed good at 60, but the price strength has deteriorated to 49. Buyer demand is able to stay intact, but other parameters have also taken a hit in the recent quarter. Overall, ratings and chart, if you couple, and there are a couple of factors which are not favoring to take fresh entries. So, advice is to stay away from these kind of stocks. If you have already taken position, the 21 DMA is nearly 9-10% from here, so you can keep that level as a stop loss going forward. Next, we can take is NetWeb. The rating section has been looking very great for the company. EPS is at highest at 99. If you look at the ratings growth, consistent for the last 2 quarters, especially the growth rate has been above 100%, exceptionally good. That is reflected in the EPS for 99. Price strength and other technical ratings, buyer demand have also been very good, belonging to the top category. Recently, it broke out from stage 3 cup base pattern, but on the day of breakout, again, it showed some kind of bearish reversal. It not able to close in the top half. It closed near the day's low. And from there, the stock has not found the required momentum to take it forward. It is trading very near to the pivot. and currently it is trading. It retraced towards its 50 DMA. It might find the support at its 50 DMA, but fresh entry is not advised at this moment. A rebreakout can happen if it rallies or rebounds from the 50 DMA. You can wait for that opportunity to take a fresh entry, given that it has very good set of ratings. And if you have already taken the position and looking what to do, I think 50 DMA and 100 DMA are very close to the current market traded price. If those levels are breached on higher volumes, you can exit this stock and look out for other stocks for investments.
Thanks, Raj. So Vivek has a question on base counts. So can base count be done on daily or weekly? It can be done on both the charts, daily or weekly chart. That doesn't matter. The second part is it valid for large cap? Yes, it is valid for all the ones. Large cap, small cap, सबके लिए valid है वो. Generally, it does reach 20%, but yeah, what we have back tested and observed that the rules remain same for all the type of stocks, which is whether it's large, mid, or small one. The third part is, can we consider base reset if price goes below the moving average? No, there is no such provision while you are observing base count that when it breaches key moving averages, you should not consider it as a reset. Only reset happens when the low of previous base is breached. Okay, let's take the stock queries now. One is on Hindustan Copper. So again, like I discussed about the China thing, the good stimulus, the international markets of the metals booming. It is forming a stage 4 base. Recently, it reclaimed its key moving averages. And you can see the accumulation over the last few days has been really good. Before that, there was a very low volume sell-off, as the Raj is indicating in the chart. So this is something positive, a good trading bet if you have done your research. But I think as for investment purpose, you need still some time because it is 18% to PVS. Plus, it's a stage 4 base. So you need some good time to, again, the base reset and then we consider it. Otherwise, the fundamentals are good. The demand of copper with the EVs and the industrialization has been good. The fund holding, decent. The number of fund holding has increased, but the shares held by fund has seen some reduction. Okay. Next, we can consider Canara Bank. Was a big winner till last few months, but I think now it is in this year mostly or the last 4 5 months it has gone through a phase of consolidation. Currently also it is going in a consolidation base. Okay, it's a stage 2 one, so that is good, but it breached its 50 then 200, but after breaching 200 DMA today it reclaimed that level, and even the volume was decent when it reclaimed that level. What other thing I liked is when it made a low near 100, you can see a few days back, there was an upside reversal. After making that low, the closing was at the day's high. So that is something positive. So the 100 level can act now as a good, support. But as it has reclaimed 200 DMA, the next and 50, the next focus will be reclaiming the pink line, that is the 100 DMA. And after that, it might complete the right side of the base. Fundamentally, it's good. ROE of 19%, EPS and sales growth decent. EPS rating of 92 is good. Price strength improve होना है. So I think once it starts coming closer to the pivot, जैसे जैसे वो accumulation होता है, price strength भी improve होगी. And once it breaks out around 126.7, that is the ideal time to buy it. There is some, advanced buying also over here. If you can see, there is a good trend line forming within the base. If you just stretch a trend line in the base, you can see that is forming, but that is for the aggressive traders and who have good knowledge for the trading only with your own research. But yeah, this is what we see over here. Next, I can take is Bank of Baroda. Again, a PSU bank. So see, there was a time when PSU Bank did really well, but I think over the last few months they are consolidating. Almost same chart if you see. Right, it is going through a long phase of consolidation, breaching 200 DMA. But this stock is yet to reclaim the 200 DMA, and as Raj is pointing out, here also there is a trend line. Okay, but the stock is below the 200 as well as the 100 DMA, so it needs to gain some strength. And over here, there is no much sign of accumulation also. जैसे Canara Bank में we saw that there was a downside reversal on a higher volume. Okay, last few days also there was some good accumulation in the stock, but here there is no major sign of accumulation. In fact, there is some selling that has been seen over here. But as Raj is indicating, looking at the price volume action, 230 can act as a good support over here. So if we are holding it, then 230 should be used as stop loss. And if you are going for trading, then I think let it reclaim 200 and 100 DMA, and then you can consider doing your own research. For investment purpose, you need to have some more time. Let it complete, let it form a new base, and then you can go for it.
Thanks, Rashid. I'll take some queries from you. So we'll go with FSL. So the stock is doing really well, forming a stage 2 flat base at this moment. Good accumulation, as you can see on the right hand side of the base. Stock is moving higher, but is unable to break out well. Did try today, but came back from the pivot. But the good part is that the volumes was lower, so there was a downside reversal, but on lower volume, so which we can ignore. Overall, can you just show me the fundamentals, the earnings profile? Yeah. So earning profile is improving, accelerating for the last 3 to 4 quarters, which is good. Fund holding is increasing, that is also good. So overall, what we need from here for the stock to be in the ideal list is that a good breakout on above average volume. Overall, the story behind the stock remains very good. So going forward, if there is a good breakout and the volumes remain supportive, definitely can be a good stock to watch out for. The next, we go ahead with this Polycap. Polycap. Raj, Polycap. So overall, the stock is forming a stage 2 consolidation base. Not much of accumulation at this moment. So major improvement needs to happen on the technical front, on the price volume action front from here. Because even the price strength at 40 is very, well, that's not that great. After forming two dots, as you can see, the stock has just been falling on higher volumes, which is not a good sign. So even for the stock to come back to the canceling radar, it needs a lot of improvement on the price volume front. And even the last quarter result wasn't that great. So let's see how the stock behaves from here in the pointed time it reaches pivot. But at this moment, at the current juncture, it doesn't look that promising. If someone is holding the stock from the previous breakout, uh, and it's trading very close to the 21 and the 50 DMA. If that gets breached out or the recent lows gets breached out, maybe you should take a call on exit. The next we can do is GMR and it's just GMR inputs. Yeah, input infrastructure. Like most infra stocks, even this one is consolidating at this moment after a good run. And I mean, the main issue with the stock is the EPS trend, poor at one. I mean, the worst trading profile for any stock that can happen from a canceling perspective. So that is a big no-no at this moment. Someone who's holding on to the stock can hold it. I mean, till the point in time, the maybe the recent lows of 89.21. That is where one can hold it out. If that gets breached out, definitely can think about exiting the stock. New entry apart with the uh, uh, canceling criteria is not supportive. Someone who wants to take a trading call can take a trading call if the key moving averages gets reclaim on above average volume. At least wait till then. I mean, before that, it will be very difficult since there is no major triggers at this moment in terms of price volume action that we can see for this stock at this moment.
Thanks, Wakar. I'll take one. I think we can take one query and call it a session. I think we are past 5:30. I'll take Newland Labs and let's look into its chart, how it is placed, and see its price volume action. Currently, it is trading very extended from its pivot. A recent breakout happened in the month of July, and from there, it has been a very good trajectory for the stock. It found very good momentum and uh, it rallied exceptionally well. And in the last 1 month, it has been consolidating, and the price action has been very muted, and volume has also come down. It is trading very close to 12,000 levels. And from the breakout, it moved more than 60% in the last two 60 trading sessions. And considering the time, it's a very good gain for any investor. The ratings still remain intact. EPS has been at 92, price strength is at 93, and buyer demand is also very good at B+. Fresh entry is not advised at this moment because there is no base formation here, and it is extended from the moving averages and US base pivot as well. And if your question is whether to hold or whether to exit, and what we can do is recently it has been consolidating in a very narrow area, and today it made a recent low and it almost touched its 50 DMA, but on the closing basis, it was able to close in the positive territory. So going forward, today's low or 50 DMA, which are very close to each other, can be kept as a stop loss going forward. If those levels are breached, you can start trimming your positions. It's a stage one base pattern, Newland Labs, which happened recently. Thanks everyone for joining today's Stock Durbar. We hope it was a good learning experience for everyone joining here. For us, it's definitely a very good experience to discuss about the charts and analyze from the owner's perspective. We hope the same is on the other side as well. Bi-weekly, we do this Stock Durbar. So next week, we have Bajaj Pe Charcha from MarketSmith team. And the next week after that, we have again, we'll be coming back to Stock Durbar on Thursday evening. And tomorrow again in the morning, we'll be back with the pre-bill as at 8:45 in the morning. So we hope you to see you there at tomorrow's pre-bill. Thank you everyone for joining and having a discussion here. Thank. And for those who feel left out that your stocks are not discussed, you can write to us on mail sales at marketsmithindia.com, and we'll take we'll make sure that your query is answered on mail. Thank you everyone for joining.